Chinese housing real estate market continues its slump into the fifth year. Reports are suggesting that it has wiped out 20 years of investor gains. Can something similar like this happen with the UAE market? Or is the UAE market protected fundamentally for different reasons? So who are the main players in the Chinese story and what went wrong? In China, the government holds all the land. There is no freehold land. So a developer had to buy land rights from the government. And how does he buy it? He takes money from the bank to do this. Now, you have the investor here. The investor also gets money from the bank to invest. Now, unlike the UAE market, here, the investor could take a loan of up to 80% and give it all to the developer. Now, the developer was going to put all this money into project 1. Now, what happened and what went wrong here? The regulations a few years back did not dictate how the developer was supposed to spend his money. So what developers started doing there, they would take the money which the bank was giving them and the investor was giving them, and they would launch project number 2 with that. And a new cycle of debt would start. This was the debt spiral. This model ensured that the projects kept getting launched, the unlimited debt kept inflating the prices, and two things fundamentally were working against this. 1. The population demographic of China started changing because of the one-child policy, which essentially meant that the demand started tapering off. Second, the prices of products became so high that it was out of the reach of the common person. And here is when the Chinese government stepped in. And here are 5 reasons why you will not see this happen in the UAE market. Number 1. The UAE market is essentially a cash market. You have to enter the market with your own money and you cannot take money from the bank at the initial stage. The second is the escrow protection. In the UAE, the developer cannot directly access your funds. They have to prove to the government that they have finished certain milestones in construction to be able to access those funds. The third point is the global demand for real estate that is being built here. Unlike in China, where the population is slowly coming down, and this impacting demand, in the UAE, where the population is around 12 million, we are expecting to see the population go to 16 million as per the government targets by the year 2040. This will ensure organic demand continues for the real estate market here. The fourth point is that the land is freehold in the UAE. Unlike China, where the government is the owner of the land and you can only get a lease there, here in the UAE, there are zones where you can invest and own both the land and the building on it. This makes it more attractive for an investor. But the biggest structural protection for investors in the UAE is something that most people don't understand. 90% of the population here is foreign, which essentially means the country drives on foreign investments and foreign demand. There is going to be no policy that is going to come which can harm the interest of the investors. China could probably afford to take a political decision to achieve their socio-economic goals. But in UAE, that is structurally not possible. Give me one good reason why you should not invest in the UAE in the comments below.